So today we're going to be talking about how to predict the market direction using liquidity. Liquidity is basically money and where money lies in the market. So today we're going to be going over that, and this is going to be a big help to those who have trouble knowing the direction of the market. So let's get into it. So as I talked about, liquidity lies at the highs and lows of the market, but it depends on the direction the market is going on. So for example, Euro USD, in this bearish trend that it was in, liquidity lies on the low because it constantly takes out the low. So I'm going to take out my path tool real quick, and I'm going to do a quick example and then show y'all how it constantly does it over and over. And that's what I implement to basically trade. So let's do a bullish scenario. So we have a high, low, high. As price is pulling back down, right, we can anticipate liquidity is at the top. So the most likely move is for price to take out the high and continue. When price pulls back down and makes a new high, the most likely move is to take out that high in a bullish scenario. Liquidity is at the top. Why? Because a lot of people are looking to sell that area. So we have people seeing this as resistance, looking to sell that down, resistance to sell that down, because mind you, these people are on lower time frames. So what this looks like is just selling pressure, because they might get a little reaction at this area. So it looks like selling pressure to them, so they're gonna get into sells. They get stopped out. So liquidity lies on the tops on the bullish market and on the lows in the bearish market. So in a bearish market, we can anticipate the low ran, comes up, the low ran. All right, and as you can see, we have Euro USD. Euro USD has been bearish for a long time, and as you can see, let's zoom out. Let's actually follow this. So price has been bearish since the low right here. So we have the low, taking out the low, constantly taking out the low, constantly taking out the low, and then it breaks back bearish. I mean bullish. It breaks back bullish up here. And in my last video, I do cover how to know if the trend is gonna still continue even if price breaks back bullish. So I will be, you can go check that video right now, or I'm gonna be just putting it at the end of this video so you can fully understand this video, because this video goes with that video. So it breaks back bullish and then it continues bearish. Just continues bearish. So as you can see, that's how you predict the direction of the market. So what you would do is, if price is in this bearish trend, right, recognize where you are. So if price just took out the low, recognize where you are, and if price is like pulling back up to that zone, you have a potential to find sells in some kind of zone right here, in a supply or in a supply zone, which I will be going over in the future video. Once you enter, price may head back and target the low right here, and then you just do the same thing if price is bullish. Price is pulling back down to your zone, find entries at your demand zone. You know the target is right here. You enter, price hits your target, and The cool thing about this is fractal, so you can use this on any time frame. So I will be going over how to do top-down analysis, because it's very cool how you can really jump down to like even a yearly time frame, and then jump down to a seconds time frame and enter, and still have like the same direction. And the way how you want to use this, you want to use liquidity in the overall direction. A lot of other teachers on YouTube would don't understand that you have to use this with the overall direction. So if price is overall bearish on a daily, weekly, all that, if it's overall bearish, you want to be looking for sells. So you only want to be looking for the liquidity that takes out the lows. And same thing with the bullish scenario. So if you want to know how to implement this video better, you need to watch this video on how to view structure properly.